All right. Hello, everyone. It's Tim Davis coming to you guys with a weekend market, weekend market review. It is now early Sunday morning, January 28th. It's about 8 o'clock in the morning. And haven't done one in a couple of weeks. Just been dealing with a lot of things behind the scenes of my family. My wife's father has been very, very sick, stricken in a hospital, and now he's in hospice. So we've been dealing with that for the past couple of weeks. So I have not been able to get here, but um, wanted to stop in here while I had a little bit of time on my hands to take a look at what's happening in our markets. And I wanted to first start by looking at the SPX 200R, a tool that tracks the percentage of stocks that are trading above their 200-day moving average. And I wanted to point something out. Folks, the market is still at a stage where it is kind of at a standstill. However, the market is currently threatening a continue move higher, I think, throughout this year. That's a possibility with the way things are looking. We still could be in store for a major pullback at some point off of these highs, but it probably won't be anytime soon because of this setup here. So I want to highlight something here on this tool. So if we look at where the overall sentiment is now, we're right back at a level of resistance, which is why we start to see the market start to stall here. Now, what I want to pay close attention to is how we've been in this range bound area here for quite some time. And here, this whole area here with me over the past year or so, it seemed like a squeeze, and it looked like we have some type of TTM squeeze that's starting to formulate. That's in favor of the bulls, believe it or not, for now. So I think if we should start to see some stall. We're in the month of starting the month of February very soon. We may start to see some stall here. However, in general, the overall market is trying its best to continue a trend higher. Get rid of some of this. So if we look at where we bottomed out at, I said around about April 2022, market started to trend higher. See that this my 10 per moving average, it started to curl and go higher. So in general, the market is trying to maintain a possible uptrend if we get this breakout above this level. So if we see a breakout in this tool above 80, we can start to see some higher prices. Remember, the highest this tool can go is 100. So if we do see a move above 80, which is what we've been threatening, we failed a couple times here, and here. Looks like we are trying to get that move there. Highest we can go is 100, or close to 100. We get up to that level, then we can start to see some stalling for sure, and a possible big rejection if we get to that level. So something to pay close attention to as we travel throughout, as we go throughout the rest of this year. This is a monthly chart we're looking at, so I wanted to point that out first, is that currently we are at a stall point, stalemate. So we're starting to see the market just trend sideways and stall at this level. So some big up days, some big down days. But if we eventually break above this level, we start to see the market, the rest of the market start to really continue to move higher. So that's something to look at. Again, we're at a stalemate position right now where we could see some stall or even some type of pullback if we don't get this immediate breakout above this level. We switch it to a weekly chart. You see how, if we look at the weekly chart, we got overbought just a bit, came down, and look what price action settled. I mean, look what the percentages settled. Again, so we hit this ceiling multiple times, and each time we hit it in the past, we found a way to pull back here. But look where it pulled back to. It's pulled back, and it's trying to bounce off of this 10-per moving average. So that's something to pay close attention to as we travel through the rest of this month and into next month, do we stall here without dropping and just consolidate? Or do we break below this level? So that remains to be seen. Looks like it wants to find some support around this level in an attempt to revisit this level of resistance for potential breakout. So it's hard to say how it's going to pan out over the next couple of days or weeks, but it looks like ultimately it wants to really break out because we're at above the level. Look in the past, when we had these rejections up here, we did not get held up by the 10-per moving average. We just came right through. Same here. Got rejected up here. 10-per moving average did not hold up. Broke straight through. Up here, back down to the 10-per moving average, and it's trying to hold. So that's what makes things a little different now. So we could consolidate here, hold here before move higher, or we could consolidate here and then break down. So we have to wait and see how that pans out. All right. Let's go straight to our indices. So since we're looking at this SPX 200, let's go straight to the SPX, S&P 500. All right. So this is a weekly chart of S&P 500. And as you can see here, looking at our looking at our RSI, we are in overbought territory on the weekly chart. That doesn't mean we can't go a little bit higher. I did a little Fibonacci tool because we are pretty much at all-time high. So just trying to look at some possible potential levels that we can see price action go to. So we are at an very close to an all-time high. We pulled back from that level, and we are in overbought territory. So could we see a pullback? We could, but this 4,800 level is going to act as a level of support, folks. If we look at the 10-per moving average, is a steady incline up. So any pullback could just pull right back to that 10-per moving average before it decides if it's going to go break below it or it's going to go higher. So pay close attention to that $4,800 level. If we start to see a pullback in February, we could pull back to that level and then get a bounce. And on the upside, we could see prices eventually come all the way back up to this above 5,000 in the S&P. So those are some level to watch. 4,800 and 4,800 on the downside, 5,000 on the upside over the coming months or so. And I'm going to go to a shorter term chart, Wobble chart. And show you how much in overbought territory we've been in. Look at the stall out here. So you see price action starting to stall out here. And it's like it has the potential to pull back to this, at least the moving average. And if we go lower than that, we can see prices go a little bit lower. One thing I'll point out here is that there are some gaps in the market, which lead me to believe that we could see some stall or even a pullback. There's a gap here in the market, price action. So that could take us right back down here to this 10-per moving average, just around 48.50. And there's also a slight gap down here. So I think this range here is probably going to be pretty tight, and we could see, a tight range bound while this overbought conditions work itself out on RSI. So we could be range bound, we could be, pull back to these levels. The ultimate level of support is right around 4,800. If we break below this 10-per moving average, 4,800 would be the ultimate level of support, which would be a strong level of support. But in the meantime, we could see some, back and filling in here. It's just a lot of indecision right now in the near term. Okay, that is the S&P 500. Let's go take a look at the Dow Jones. Here's the Dow Jones. And Dow Jones also is at a level of resistance. Looking like it really wants to break out. Look at the 10-per moving average. Like this is in a steady incline, steady move higher. Right at a level of resistance though. So you see how we got up here to around this 38,215 and pull right back to the level of resistance. So again, we could see some stalling out in this area. We could see it pull back all the way down to the moving average. And I think eventually, as we consolidate a bit, I think it's pretty much we're in a consolidation phase. I don't think we're going to see a massive drop like all the way back down to these lows. I think these levels should start to hold. So right here with this Dow Jones, like there is some support right around 37. Let's say 3,800. I'm sorry, 38,000. There's some support there, right below 38,000, around 37,770. There's some support there. So this whole area here is just like a big area of congestion. But the 20-per moving average will also act as a level of support. That's close to 3,800. I'm saying 38,000. So 38,000 as a level of support. Also, 38.85 is also a level of support. Any break above 38,215 could push prices much higher. And the next fib level above that, let's take a look at a daily chart. 40,000. So would I was surprised if we see some pullback here and some consolidation where we at now, and then a bounce from these levels of support over the next month or two. We could see a move up to 40,000. That is a huge possibility, folks. Look at the TTM squeeze here in the Dow on a daily. Like there's a squeeze going on right now. That's why I think this consolidation is pretty much when you see a squeeze. It's consolidating now. It's like the squeeze here, the TTM squeeze, these red dots are forming. It's like we're starting to see light blue bars. That could be the beginning of a much higher move over the next couple weeks and months or so. So it looks like we are, it's like pull back here in the RSI. You can see we got down to the floors here. Then we started to revisit the upper band of RSI and attempting to go into overbought territory. Not quite there yet on the daily, but it's like it could be setting up for a move higher after the consolidation or possible pullback. It's a Dow Jones. Take a look at NASDAQ. Same here. NASDAQ is in overbought territory. Looking at a daily chart, like price action is starting to pull back. Again, we got this 10-per moving average here, which is going to act as a level of support. So any pullback could be temporary. So level down here, see a slight gap up here. And if we put let's do this. We had a pullback here, so more than likely that could be a near-term level of support, which is right around 15,140. Right around 15,150 to 15,170, I would say. That could be an area where we see a possible short-term pullback to that level if we continue to pull back, because we are in overbought territory again on a daily. And then we had to wait and see the 20-per moving average. If it does not bend or turn down, but it's continuing to go up as prices pull back, then we could see price actually hit that 20-per moving average and just rebound from that point. Looking at the weekly chart, again, the weekly chart shows how overbought we are. Didn't quite get to that 16,212, which is where we were in 2021, which is a high. It's like we want to go high. Look at the 10-per moving average, just in a steady decline, steady incline higher, almost like a shooting star here. So a pullback would not shock me here, but there's a lot of support, folks, below here around this 15,000 level. Yeah, 15,000 has a lot of support down there, so keep that in mind. Okay, and so so I'll say 15,000, around 15,000 is around a strong area of support. And around 16,000 is a strong area of resistance. All right, let's take a look at the IW. Let's look at the Russell. Looking at our Russell, the Russell, folks, is the one that I really think it has a potential for possible major breakout. Here's the reason why I say that is because out of all, Russell has continued to struggle in this tight range. Like this whole area, it's continuing to struggle in this tight range. It's been over a year now. So since 2022, it's been in this tight range. And every time the Russell has got up to this 23% Fibonacci retracement tool, it's found a way to pull back. So right around that 19,000, 2,000 level. So 19,993, 19,995 to 2,000 level, it has found a way to pull back. So 4 times over the past year and a half, a little bit over a year, it has failed to break above the 2,000 level. However, the way price action is happening now, it looks like it's consolidating for a possible break above that level. Again, each time we have hit this level, like before I showed you on the I think it was the S&P, got down to the 10 per moving average and it did not hold. Price action continued to go lower. Same here. Tried to hold, then went lower. Same here. And didn't even try, just continue lower. Here it's different. Look at what's happening. Got down to the 10 per moving average. And look at these 3 candles here. That's a possible reversal pattern. Look at the RSI. Looks like it dipped out of overbought territory, like it's trying to go back up. So this could be a setup, folks, for a break above this 2,000 level for the first time in a very long time. I would pay close attention to the Russell. The Russell could be the precursor to the rest of the market. So if Russell finds a way to break out, then you will see after consolidation and other indices, you will see them follow. All right. That's our major indexes. Now, let's take a look at crude oil because it also been showing a potential breakout. And I think this is it has a perfect setup. So here's a weekly chart of crude oil. First of all, it's consolidated for quite a bit. So it's been down here in this range quite a bit. Tried to break out, came right back down to this range quite a bit. And look at the setup. We have been pretty much range bound around the support level. And then look at this big green candle we're starting to see on this weekly chart from last week. Big green candle, folks. Look at the RSI finally. Dip down to the overbought territory in this on weekly chart, and it is starting to curl up and go higher. TTM squeeze starting to show some positive signs for the bulls. I think we are about to see this breakout and crude continue. So that could be a good space to take a stake in. Here is a current daily chart, and as you can see, TTM squeeze looking definitely bullish. It's starting to be an overbought territory on the RSI, but this could continue to go higher. We have resistance right up here, right around the $82 level. So again, I think we could continue right on up to that $82 level before we start to see some stalling and maybe some consolidation. Not a pullback. I don't think we're going back down to these lows down here around 70. That may be over. You could see consolidation up here around 82, 81, and then eventually a break above this level of resistance. And that's what I suspect we could see. All right. That is crude oil. Let's take a look at gold and see what gold is doing, because gold also has been pulling back, consolidating, but you notice it as gold got above 2,000, it has not broken back below 2,000. That's a strong sign for the bulls for gold. So we've been back down here around the 2,000 level, but hasn't really broke them below it. And look what's happening in the RSI. It's starting to turn up as well. This is a daily chart. RSI starting to turn up. T10 squeeze starting to show a positive sign. And price action is just hovering right above its 10-period moving average, looking to possibly challenge. I mean, head back up to challenge at 2100 level. You take a peek at a weekly chart. You can see how price action pulled back on a weekly chart. And what did it do? How it reached that 2100 level, came right back down to the 10-period moving average, and look like it's getting stuck. Look at these candlesticks here, these long shadows. Got stuck right at this 10-period moving average. It's either it's going to break down completely and just come and stop getting stuck and break below it, or it's going to consolidate before it makes a run back up towards that 2100 level. Look at the RSI, like it wants to curl up already. So I think we're just in consolidation mode for gold before the next run higher. Take a look at silver. Same. Looks like silver has put in a pin, put in the bottom right here, this pin. I call it a pin. But it's like we put in a possible bottom here, like it wants to possibly turn up. So next week's going to be interesting to see if these levels of support hold for gold and silver. You see on the weekly chart like it wants to turn up. Take a look at a quick daily chart. As you can see, it already started to turn up, and like we're starting to hold right above that 10-period moving average. So next week could start to see some move up in gold and silver as well as crude oil. So those who follow Bitcoin, this is not something I normally do, but it also shows something very interesting. It showed a reversal back to the upside after a like I said, massive pullback, but that's a short correction. I think we're going to see higher prices in Bitcoin too as well. So reached almost 50,000, came right back down, starting a horseshoe pattern, starting to turn back up. Look at this big green candle last week. Look at the RSI, hit the oversold territory and starting to turn back up. TTM squeeze, starting to turn from red to yellow, starting to turn back up. Then we're going to see a move higher and possibly a challenge of this level here, which could be a breakout area. So that's going to be level of resistance. We could hit that area, consolidate, and then we could consolidate and break right through it, or we consolidate and trickle back down. We have to wait and see, but I think we are in an upward move in Bitcoin right now. With that said, I want to before I close, I want to point out a couple stocks, individual stocks that I've been seeing possible breakout moves in that I've been considering taking positions in if I already have a position in. And since we're on Bitcoin, let's start with MARA, which normally tracks. It's it's a tool that follows Bitcoin prices. So this one has been it could either make you disappointed if you're bullish, or it can make you very, very if you're bearish, it can make you upset as well if you're trying to trade this thing back, because it's very volatile. But when it starts a move in one direction or the other, it is normally a massive move. Now, what I wanted to point out here in MARA is that it had a massive move down over the in the course of January, got up to as high as 31, then it just pulled back. It tried to hold the 10-period moving average, but couldn't, and just broke massive break. But look what it's doing. It's around the bottom, starting to curl back up. Look how oversold it got. Look how it was down there for a couple of weeks, and it's starting to turn back up. RSI is back above that 30 line, and with a vengeance, starting to run back to the upside. So I think right along with Bitcoin, this will probably continue up and start to challenge these levels here, which is around 25, and then challenge this 31. So next couple of weeks, next couple of months could be very bullish for Mara. So that's something to keep an eye on, or possibly if you want to take a small position, that's a potential winner right there. Another one that's been intriguing, something that I've spotted. Uh-oh. What am I doing here? I got something on here that I don't want to see. I don't know what this tool is. Okay. All right, AVTR. This is something I saw. I forgot where I saw that, but it kind of caught my eye just because of the overall setup. And it had a big gap up here, so it started to pull back from that gap, from the gap up. Has earnings come up. So I don't know if this is going to be a breakout, a continuation of a breakout. But if you look at a longer term chart, this is what really caught my eye. It's also been consolidating. It's a monthly chart. It's been consolidating down here below this 10 per moving average quite a bit, and it's finally starting to close above it. Look at a weekly chart. Look at the RSI, how it's starting to curl back up, and price is holding above its 10 per moving average. And it's been, trending downward for quite some time, but it's starting to trend upward now. So it looks like it's a possible good position for a longer term setup, and like could be seeing a move higher longer term. That's AVTR. ETRN was another one that I actually have a position in. I have a couple long-term call positions in this, because I see this as a potential breakout above this 1152 over the next couple of months. Had this big gap up in April of 2023, and this big gap up, and since that gap up, it has been hovering, between 8 and 10, and riding this 10 per moving average. And it has not revisited this gap down. I don't think it's going to anytime soon, at least. So I think this is going to find a way to continue higher. So I think the 10 per moving average is acting as a level of support. I think the next move over the next couple of months, we could see a move back up towards this 1152, and maybe even a breakout above 12. Again, the longer term chart shows, it's a monthly chart. It's just strong. It's just been showing how we got to find a reversal from the downside to the upside finally back in May 2023, right here with this big green candle. And then since then, it's just been riding this 10 per moving average. And now it's like it wants to possibly curl up. So that's something to keep an eye on. USO, which tracks crude oil, has been showing a lot of unusual option activity. And this could be in store for a possible breakout. Let's look at a weekly chart and a daily. Here is the weekly chart. Look at the RSI turning straight up. Big green candle last week after some consolidation below the 10 per moving average, and we back above it. On USO, look for that one to continue for a big move up. The next level of resistance looks to be around 83. And one more that I kind of like, Amazon, folks. I think Amazon is strong, and I think it wants to do like some of the other some of these other big name stocks like Nvidia, all these others. It's like it wants to find a way to get back up to its all-time highs. Look at the 10 per moving average. It's pretty much in the upward trend line to show the ultimate path it's been on since beginning of 2023, even with the pullbacks. Every time it pull back, it'll get a bounce, major pullback, it'll get a bounce right off this trend line. So since we got this pivot move back beginning of 2023, where we was around $81, this found ways to continue high, and anytime I have major pullback, we'll pull back to this, pull back to right below the 10 per moving average, right around it, right at this level, this trend line, and bounce. So in overall, it's been trending higher. So we went from $81 in 2023 up to 159, and the ultimate high is 188. It looks like we could take that out sometime this year. So keep an eye on Amazon if you're not already have a position. Any pullback would, I think, would be a buying opportunity for Amazon. Like the next level of resistance looks to be right around 170, I will believe. Let's see. Yep, right around 170 looks to be the next strong level of resistance. So, folks, hopefully this is some information. Here's the daily chart of Amazon. We're in overbought territory. Got earnings coming up. That could fade either way, folks. So play cautiously. It could hit earnings and get that break up to 170, or it could earnings and pull back to level support before the next move up. So food for thought. Longer term, I think we could possibly definitely want to see some higher prices in Amazon throughout this year. All right, folks, that is all I have for you guys. Hopefully, it's some information you guys can use until the next video. Tim Davis signing off, and enjoy the rest of your day.